Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Hi everyone, so I thought I'd do a bang up to date podcast as of the date of this going out about the global market and the effect on UK real estate. So obviously we now have a situation where Donald Trump, the US, has slapped a load of tariffs on countries worldwide, and it's really interesting how this is going to play out, and I think there's definitely different theories about that. So what I wanted to do was to take you through it in terms of my view, and I really want to stress this is my view. I've been in commercial property market for 30 years now. I've seen 3 downturns, 3 recoveries, so I've got a pretty good idea of the way real estate reacts. Obviously, every market is different, so making generalizations is quite often dangerous. But I want to tell you about perhaps the threats and some of the great opportunities that I see that are coming into this market. So let's get going. So just as a recap, I think you probably have to be hiding in a cave to not know what's been happening recently. Donald Trump is doing the art of the deal. He's basically doing what Donald Trump does, and that is maneuvering himself to have all the Trump cards in a negotiation. So that's the first thing really to say, is that he is issuing tariffs on countries across the world, of varying degree. Obviously, at the moment, UK has got 10% tariffs. All of our neighbours have got much higher tariffs, and that could play out to our benefit in the UK, because we could look relatively cheap compared to some of our neighbouring economies, Ireland, the EU, etc. But more about that later. So the tariffs have basically now been implemented, and China, as of the date of this recording, has now reciprocated with a huge tariff on US goods. I mean, literally, you couldn't make it up. We need a few more women, frankly, involved in global politics, but I will put that to the side. So Donald Trump's doing what Donald Trump does in terms of positioning himself, positioning the US, so that they hold the, excuse the pun, Trump cards. And what he's hoping is that, or I suspect how it will play out, is that countries will come to the table to negotiate with him. And apparently that is happening already. And, you only have to look at the balance of power that's happening in the world right now. People are terrified of upsetting Trump. He's quite volatile, egotistical, and, it's working. Let's face it, the man is making it work. This is the way he does business. This is the way he's running the US at the moment. He's using all his business tactics. You go in aggressive, then people will come to the table and they're on the back foot. That's the kind of the art of the deal, the art of the negotiation. If you haven't read Donald Trump's book, it's definitely worth having a read of that to understand what he's doing. As an undercurrent under that, it appears that he also wants the Fed to reduce interest rates. That's obviously going to boost business. But the Fed is Democrat-led and has been refusing to do that. So what do? You basically trigger a short, sharp shock. It's not in Donald Trump's interest for this shock at the moment to last very long. Markets have collapsed, and we all know that markets are run on sentiment. So when you have people feeling emotional, whichever way it is, whether it's if they're emotional, feeling optimistic, then obviously that's when prices rise. If markets and people feel pessimistic, that's when prices fall. That's when we have a downturn. That's all it is. It's just sentiment. So at the moment, sentiment is poor. Markets have collapsed across the world. Everyone's worried. There's talks of global recession. Like, just don't read that stuff. There might be a global recession. Let's go on to that later. So there is what Donald Trump is hoping for is that I think China are now selling off US bonds, and what he's hoping as is basically he's going to box the Fed into a corner so that they have to reduce interest rates. But Donald Trump wants it to be a short, sharp shock so that actually markets bounce back, the Fed reduces interest rates, and I think that is his game plan. He wants to boost business after all. Now, at the moment, obviously, everything he's doing isn't going to help the UK consumer particularly, especially with reciprocal tariffs, and it's really not going to help business, which makes me think that he's so business-led. That this isn't a long-term strategy for him. I think this is relatively short-term. So let's unpick that in terms of how the UK, but more particularly how the UK commercial property market is going to behave, and therefore kind of more specifically kind of where the opportunities are for your investing. So the first thing I think to say is that that no market likes volatility. So at the moment there is a issue with volatility, and that is going to be making investors nervous. I've seen a lot of kit on the market recently, a lot of properties on the market, both on and off market. I think there's a big financing peak this year where a lot of debt was taken out in 2015, and a lot of debt is being refinanced at higher interest rates and at kind of lower loan to values. And so therefore there's a lot of motivated sellers out there. So it's a good time to buy anyway. But we are in a window of opportunity. I know I've talked about the window of opportunity a lot, but we're in a window within a window right now where vendors, especially if they have to sell because they, maybe underwater or, they need to refinance, they're going to be especially motivated because everyone's talking about a global recession. So what they won't want is for prices to fall further. So if you can put a sensible offer out, especially if you're cash, especially if you're proceedable very, very quickly, then the likelihood is that you're going to get some really nice low offers accepted. So this is a great time, and this may not last forever. Bear in mind that Trump doesn't want this to last forever. This has to be a short, sharp shock. This could be a matter of weeks, or it could be a matter of a few months. So we have this window within a window of opportunity where there is a potential for there to be some amazing buying prices. So that's the first thing. Second thing is that what happens in the market is that the top end of the market starts to recover. And obviously the top end of the market is really clued into sentiment, into the economy, into market sentiment, because you're talking about high net worth investors, you're talking about PLCs, you're talking about pension funds, all very, very clued into what's happening economically. And if they start getting jittery, then prices start to fall at the top end of the market. And obviously that then cascades down. Now, and a lot of the upper end of the market is propped up by overseas investors. So it's a kind of a yin and the yang on this one, because we've got jittery investors at the top end of the market, very clued in, very sophisticated investors. But we also have the potential of more US investors coming into the UK because of the uncertainty and instability in the States. So interesting to see whether that one plays out, because obviously if the top end of the market gets bolstered, and obviously they'll only invest in certain types of trophy assets, then that will trickle down to the rest of the market. So, interesting to see whether that one plays out. I guess the third one is interest rates. So obviously if the Fed is boxed into a corner in the States and has to reduce interest rates, we tend to follow. It will bolster the Bank of England's confidence to reduce interest rates as well. and because we tend to follow the US as well. So question, will we actually see interest rates dropping more than potentially we think they might do? Otherwise, if this hadn't happened, and obviously that's only a good thing for bolstering lending and to make property purchases cheaper. So that's a really good thing, and that potentially could boost the market itself. It's interesting. But on the flip side, we're seeing bond yields increase, UK bond yields increase, and commercial property yields are very much pegged to bond yields. So for example, if you buy government bonds at 4.5%, you're not going to buy a prime property at that level, just because bonds are seen as risk-free, and UK property is definitely not. Any property is not risk-free. You've got loads of risks associated with it: tenant risk, liquidity risk, market risk, loads of risks. So bond yields are seen as risk-free. So automatically then we start seeing commercial yields increasing. So we've got this interesting market now where we've got tension to reduce prices, but we've also got tension that potentially could increase prices. So it's a really interesting one. But obviously, where there's uncertainty, where there's volatility, where there's fear and worry, the headlines are all talking about a global recession right now, that's where the opportunity is. So focus on the opportunity, read the headlines, understand it, but really what we want to focus on right now is the opportunities. We really need to make sure that we understand where we are with it. So if you're a cash buyer, you're going to be in an amazing position right now because you're proceedable, because what vendors are looking for is speed and certainty. So if you can buy cash at the moment, whether that's through investor money, JV partners, your own cash, whatever it might be, then it's a great market to invest in. And as I say, we have this window within a window, and it may not last very long, or it may last the rest of the year. If you remember from a previous podcast, and if you look at my social media posts as well, agents have been talking 2025 market up. I knew that it wasn't going to recover this year. It just everything wasn't right for a recovery, and we're seeing the recovery stalling. At the top end of the market, we're seeing we've been seeing a bit of sentiment improving, but this is going to stop it. And so 2025, I think, will still be within this window of opportunity where prices are lower and where there's some great opportunities. Now, it'll be really interesting to see how the UK government responds to all of this. Keir Starmer is, I would say, faltering at home, but he's actually doing pretty well diplomatically overseas. So it'll be interesting to see where this lands. Will he be able to do a trade deal with the US? I mean, for sure, the UK is going to be on the back foot, like everybody else in the world is on the back foot. So will a trade deal be done? Will that make us super competitive compared to neighbouring locations? So if you think about, we have basically 15% less tariffs than our neighbours do. Is that going to bolster investment in the UK? Is that going to bolster investment in manufacturing? Is that going to bring businesses back into the UK? Have to say, if I was the Chancellor at the moment, I'd be seriously looking at adding tax breaks and, making huge encouragement to bring overseas US companies, EU companies that are located in Ireland, like, Apple and Google, etc., kind of entice them onto UK shores. This is a window of opportunity for the UK government to really bring some serious business in. Really, these opportunities only come around so often. Unfortunately, I suspect they're not going to take this. I suspect that their philosophy and their direction of travel in terms of where they want to get to with debt is going to fetter them. I don't think they're going to make decisions. They're not going to be fleet of foot enough to make those kind of decisions that could really boost UK PLC. We could really get a competitive advantage on our neighbours. And unfortunately, I don't think that's going to happen. Like, deep respect if it does, actually, because I think that will really help the UK economy. Is there going to be a global recession? I don't know. But I suspect that Trump doesn't want there to be. That's not the overall objective. The overall objective, he's got other things that he wants to do. He may unwittingly be stumbling into a global recession. So make sure that when you're making offers in this window within a window that you're offering for tomorrow. So don't overpay. Asking prices at the moment are still, I think, overpriced. So make sure that you understand what you can afford. Make sure you've got some wriggle room in for your asset management. And what I mean by that is if you buy at the right price, then obviously if you do some asset management, like letting a vacant property or restructuring a lease or, increasing the rent or whatever else, you've got somewhere to go with the yield. So if you buy at 8-9% and then yields move out a bit further, you've got nowhere to go. Whereas if you buy it at a higher yield, you buy at a price where you've got some wriggle room. Even if the market moves out a bit, you're still going to either stand still or improve your yield through your asset management. So buying price is super, super important at the moment. So definitely keep an eye on that. And then I would say choice of asset as well is also really, really important.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So let's talk a bit more about choice of assets. So when we have threats of recessions, when we have threats of these kind of global events, there's going to be winners and losers. So bear in mind that commercial property is anything occupied by business tenants. So what we're interested in with regard to tenants is businesses. We're interested in who's going to perform and who's not going to perform. And obviously, we don't quite know that at the moment because we know there's potentially certain industries that are going to suffer because they import a lot to the US. And, for example, building materials as well will be more expensive when we import them from overseas. Raw materials that we export to the US potentially are going to and products that we export to the US are potentially going to be affected. So just be aware of that. Whether these tariffs will last very long, I don't know, but just be aware of that. Be aware that if there's a market downturn, we need to look at retail. And what happens in a market downturn is that discretionary spend really, really starts to stop. So what discretionary spend is things you don't have to spend on. So that might be home improvements or, new clothes or going out for dinner or, going out for a fancy night out. You don't have to do that. So, going out to a restaurant. So you won't do that. Takeaways, a bit more robust, but people will kind of cook at home more. So food is pretty robust. That's a basic need. Things like health are pretty robust. Convenience type stores are pretty robust. So just have a little think about that. I'm not necessarily saying pivot, but tenant type is quite important. And then, think about manufacturing businesses. Depends on the type of asset that you're investing in, but manufacturing businesses, offices, office tenants, it would be worth probing into tenants, seeing where their markets are, and kind of the effect, that there's no doubt that the next 5 years in the US is going to be volatile. Trump is a volatile man. He's learned a lot of lessons from his first term, and he's obviously come into this term with a huge agenda. So, and he's definitely he's a very smart man, obviously. But he doesn't really care about upsetting people because that's what he's done in business many, many times before. So, he will be volatile throughout the 5 years. So just think about tenant types that might have very close trading links to the US and think about the effect that might have on them. So how do I summarize all that? Well, I think that the main point to take away is, well, there's several really. Number one is, be greedy when others are fearful, and be fearful when others are greedy. So we want to be contrarian investors. We want to look for the opportunities in this turmoil. The sentiment and the emotion that goes with markets, frankly, is often based on nothing. It's based on expectation, and very often those expectations don't come true. But this can be a self-fulfilling prophecy. So watch this space on that. Yeah, I don't think that Trump wants this to be long term, but equally, he might stumble into a global recession without realizing it or intending it. So keep a close eye on that. The way, obviously, there's ways to mitigate your risk in terms of choice of asset, buying price, tenant type, the way you finance it. So not leveraging too high, getting your loan to value at a slightly lower level if you can afford to do that, buying cash. Commercial finance tends to react quite quickly. So if commercial finance starts getting worried, I expect we'll see loan to values dropping. To be honest, they're all already pretty bearish. They're looking for vacant possession values on property rather than market values, etc. So, that hasn't unlocked for the last couple of years. So, they might increase rates. I don't know how they'll do it, but watch this space on that. But one thing that I'm really clear on is that there's this window within a window where there's potentially some fantastic opportunities. So how do you take advantage of that? Well, the first thing is work out your strategy, work out your financing strategy, speak to a broker. I use Callum Brooks at Bond Finance. So if you speak to him, if you mention this podcast, he will give you a free consultation to talk to you about kind of what's the art of the possible for either a particular deal or for your particular financing needs. So try and get in cash if you possibly can. That's the ideal scenario. Build relationships. Be highly strategic with your investing. Think about carefully about what you're going to buy, and try and hit some of the sweet spots. Perhaps kind of look at, if you're looking at retail, look at properties that are suitable for service operators, etc. If you're looking at industrial, just think very carefully about the tenant profile, and then build relationships with commercial agents. There's a lot of deals being done off market. I'm being sent a lot of off market deals at the moment. So get those relationships built. Make sure you're getting that throughput of deals, and then just make sure that if you do offer stress, speed and certainty, because that's what vendors are looking for at the moment. If a vendor doesn't need the money, then you might be able to look at option, or immediately might be able to look at options at slightly higher prices, which give you time to do some asset management. And stress, speed and certainty, maybe put multiple offers out, but definitely don't overpay. Like, follow up is your friend in this market. So put out reasonable, sensible offers that you can afford, that allow you some wriggle room for your asset management going forwards, and stay firm. Don't ignore asking prices, because at the moment they are, they're too high. I think ignore asking prices, put offers out that are sensible. Sometimes if your toes aren't curling when you put an offer out, you're not putting it out at the right price. So just remember that as a philosophy. And then if you don't get your offers accepted, just follow up, because if purchasers need commercial finance in particular, there is a very strong potential that they may not be able to get that in this market, or financing requirements will change, which means that follow up will be your friend in terms of potentially nabbing deal later down the line. So a really quick run through in terms of where we are. This is recorded for posterity now, so we'll see whether this plays out. What I can't do, obviously, is I haven't got a crystal ball. I can't foresee what's happening. I do think I know what the intention is, and I don't think the intention is to push any country or the world into a recession. I do think these are negotiating tactics. And so these tariffs could be over very quickly, but I think it will leave a bad taste in markets' mouths. They will be constantly got half an eye to what Trump's going to do next. So I don't think that 2025 is going to see massive increases in value. So we've got this window of opportunity that will still continue, and then either for a short or maybe a short period or maybe a bit longer. We've got this window within a window where vendors will be worried about what's going to happen and potentially might be accepting offers that really they wouldn't have looked at maybe even a month ago. So take advantage of this, take swift action, build relationships, and good luck with your investing.